Hey guys, what's going on? I'm Robert Montez with Nexus Wealth Management. Today we're going to be going over what helped the market, what hurt the market, and your key takeaways for the week of September 1st through the 5th, 2025. So first off, let's go through your recap. We saw the S&P finish up 0.3%. We saw the Dow finish down 0.3%, and then the Nasdaq was up 1.1%. So what helped the market? Well, there are three big things. Number one was we're seeing the effects of the anticipated 0.5% rate cut that is proposed between now and the end of 2025. As we've talked about before, when rates come down, both businesses and individuals tend to spend more money because more of their money is going towards what they're purchasing and less towards servicing their debt. The second thing that we saw was high corporate earnings, specifically with the Magnificent Seven. So tech stocks, AI-based stocks have been doing really well across the board. I think it was something like 80% of companies on the S&P 500 beat expectations as far as their most recent corporate earnings, and that's really helped bolster the performance that we've been seeing. The third thing we're seeing is the lowering of taxes as far as corporate taxes. So the extension of the 2017 Tax Cut and Jobs Act for corporate taxes down to 21%, as well as the proposal for some domestic companies to get down to as low as 15%. What we're seeing is more companies are investing in research and development. There's also been some legislation that would propose about $950 billion in tax savings over the next 10 years for some of these companies, which is huge because it's freeing up more money for them to invest in research and development for their company. So as far as what hurt the market, there were a couple of major things. Number one was weaker than expected labor market data. So in the month of August, we saw 22,000 jobs added. This was far lower than the 75,000 jobs that was forecasted. In addition, we saw unemployment hit 4.3%, which lowered confidence in consumer spending ability as well as the momentum that the job market currently has. The second thing that we saw was persistent inflation. Inflation has been sitting at around about 2.5% to 3%. This is higher than what the Fed wants to see, and as such, this is what has prevented them from being able to aggressively cut rates. The third thing is the ongoing tariffs and trade conversations that we've been seeing. A lot of this has been positive, and we're seeing this to start working itself out, but it has impacted companies, specifically smaller companies. I saw a recent report that was showing that as much as 29% of small cap companies are expected to be operating in the red this year, which is something that is definitely hurting market performance as a whole. So as far as your key takeaways, what I would say is the market does look good overall, but there's always things to pay attention to. Maintain a long-term perspective. There's always going to be good mixed with the bad. The second thing is review your holdings. Make sure you're diversified. I see all too often that people have the proverbial all their eggs in one basket. That is not the route I would encourage. Definitely check out your international exposure as well, because we've seen international equities shining lately. If you guys have any questions, we'd love to be a resource for you. Please don't hesitate to reach out. Consider leaving a like, leave a comment, share this video, and let me know if I missed something. Until next time, guys, see you next week, and thank you so much.